Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value investor. And today I want to analyze a stock from the very interesting British market, and the company I want to analyze is Safestore. And the reason I want to analyze Safestore is because one of my followers, Dimitri, just asked me to do that, and because he wants to buy currently this stock. And so I took a deeper look and found out this is quite a very interesting company. And so I went through all the numbers of Safestore and then decided also to make a video about it and let you know my opinion on this company. Overall, the British market, and here we just have the index, the FTSE 100, is a very interesting market, especially after the Brexit. And when we look here at the chart of the FTSE over the last decades, then we see since the beginning of the 2000s, this index go nowhere. I think there are some very interesting companies, and maybe Safestore is one of them. And of course, with the Brexit last year, it is even a little bit more interesting. Safestore is currently traded at 1016 pence with a market capitalization of 2.142 billion and a P/E ratio of 8.76. They pay a forward dividend yield of 2.07%. Safestore is the UK's largest self-storage group with 163 stores, comprising 125 wholly owned stores in the UK, including over 70 in London and the southeast, with a remainder in key metropolitan areas such as Manchester, Birmingham, Glasgow, Edinburgh, Liverpool and Bristol. 28 wholly owned stores in the Paris region, 6 stores in the Netherlands and 4 stores within Barcelona, Spain. Safestore is listed as a real estate investment trust, a REIT. A real estate investment trust, here is a definition by Investopedia, is a company that owns, operates or finances income generating real estate. And so the portfolio of Safestore have overall 161 stores. And here we see the most of them are in the UK with 128 stores, most in the area of London, but they are also in Paris and Barcelona. When we look at the financial numbers of Safestore, then we see there is a really strong record in the past. Revenue, EPS, also dividends just rose quite nicely over the last 7 years. And so this looks very, very good, very, very strong. Seems like this is a good business model. So very, very interesting. And also when we look at the guidance, they still want to grow the dividend, at least in line with earnings growth for the medium term. And the earnings per share for 2021 guidance is around 37 pence to 38 pence per share. Keep that in mind for the valuation. What's really interesting is that the self-storage market in Europe remains relatively immature compared to the geographies such as the USA and Australia. In the UK, in order to reach the US density of supply, it would require the addition of around another 17,000 stores as compared to currently 1,400. In the Paris region, it would require around 2,400 new facilities. This seems very interesting. Safestore have a very good market position in an immature market overall, and it seems like there is a lot of potential. Very, very interesting. So let's take a look at the financial numbers overall for Safestore, and here I just listed the most important numbers I use when I analyze a stock. Then we see especially the revenue growth and EPS growth is nice, around 10%. The margin, the net margin is great. And also the returns are really nice. And with a low debt equity ratio of 0.51, also the balance sheet is very, very solid. But when I calculate the intrinsic value with the estimated earnings per share for 2021 of 38 pence per share, then I come to an intrinsic value with an expected return of 12% of around 500 pence. And this, of course, to the current price of 1000 pence, just mean that the stock of Safestore right now seems like overvalued and overvalued by around 100%, which is really, really a lot. And so, of course, that's a red flag. That's way too expensive, even if I like the business model of Safestore, even if I like the company, the idea, and also the position in the market. But of course, with this exuberant high valuation, it's absolutely no-go for me. And then, even if I don't get a lot for price targets or analysts, but when you look at the Yahoo Finance and the 1-year target estimate, then they have a 1-year target estimate of 589 pence. And so maybe my calculation is a little bit too negative, but it seems like it's not out of this world. And so Safestore right now is way too expensive for me. I will keep them in mind. As I said, even if I think the business model and the business overall is great, but it's just too expensive. And so the British market is still interesting for me. I will look at some other companies. If you have any ideas, just let me know in the comment section, and then I will also take a look at these companies. I really would like to invest in Great Britain, in the UK, but of course not at every price. So that's it for today. If you like this video, give me a big thumbs up. And if you're new to my channel, I just want to give you a reminder that every weekend you get a weekly update on my real money North American portfolio, which is up right now since the start at the 2nd of December 2019, around 62%. And so if you want to have a full insight to my portfolio, just subscribe to the channel, ring the notification bell, and you will never ever miss another video. And so every weekend I give you a weekly update and full insight to this portfolio, and then also every week at least one stock analysis. That's it for today. Thanks for watching. See you the next time. Take care. Bye bye.